Hello and welcome. This is the Market Wrap. I am Agam Vakil. We've seen more strength on the benchmark indices with the Nifty now advancing and comfortably above the mark of 11,000. Among the key gainers in today's day of trade, first one is UPL. That's advanced by as much as 15%, in fact over 15%. We will have Yash join us just in a bit to talk a little more about that. We've got a lot of strength coming in Vedanta and Bajaj Finserv. In fact, the Bajaj Finance twins are advancing in trade, continuing to move from strength to strength. Adani Ports, ITC and Bharti Airtel also lending strength to the indices. On the losing end, weakness in Bajaj Auto and Hero MotoCorp. More weakness in Bajaj Auto, in fact. Wipro bearing down, as well as HDFC down after the earnings coming through over the weekend. Reliance Industries not too far behind. It's also down as much as 0.7%. But the market breadth was positive this time. When it comes to the broader markets, in NSE 500 market breadth, we had two gainers for one loser. Among the gainers, we did have PC Jeweler now advancing 14%, L&T Finance holding up as much as 10%, Johnson Controls, Havells India also making a big up move along with Bata India. All of them on account of not only the earnings coming through over the weekend, but also the GST rates being reduced for a lot of these goods. South Indian Bank, on the other hand, continuing to decline by as much as 18%, followed by 8K Software, 8K Miles Software, ILFS Transportation, and Take Solutions continues to grind lower. Well, mixed trends coming through, but the positive is that the advance decline ratio has improved. Let's get in a perspective here. We'll bring in Neeraj Shah to get us an idea about how he's reading the market. So how is it looking right now?
Well, a good surprise actually in the second half of trade. I must say, when these happen, and typically when consumer stocks or consumer sectors get a bit of a fillip, the market tends to like it and tends to rally. It didn't quite happen in the first half, and the global markets are not quite that supportive. In fact, European markets were down in Friday's session, down about a third when we shut shop today as well. So it's not that the global picture is looking all hunky-dory. I guess this is in part due to what we did. And in part, Agam, the interesting bit today was that banks did well in the last couple of hours of trade. And the markets have done well without HDFC Bank and Reliance Industries doing well. The three heavyweights haven't participated today. And we've done reasonably well. So good to see ITC come to the fore. Maruti, interestingly, I just remember being at 8,400, 8,500, and solely and surreptitiously is back to 9,700. I don't know if it's got to the play with money moving out of two-wheelers into four-wheelers or otherwise. But there is something at play there. But yeah, on the whole, good going. Can this really last forever? No. But this initial couple of days, because of the sentiment that came in because of the GST cuts, sure, works well. It's a very busy week. Today we didn't have Nifty numbers, but 13 Nifty companies coming out with the results this week. So I think that should what will keep us on tenterhooks. So let's wait and watch for that.
Absolutely. Thank you, Neeraj, for joining us and getting us those updates. But when it comes to the levels now, do things change dramatically, considering we are now well above the mark of 11,080 odd? This is what our technical analysts are saying. Listen in.
52 hours between 10,926 and 11,078, and it looks as if the breakout is finally coming. And looking at the OI at 11,100, I think there could be a little bit of a scramble in terms of short covering, because I think there's significant OI at 11.1 and we've remained in that 10.8, 11.1 range.
From here on, we can see extended move in which we can see 11,120 as an immediate target, and if 11,120 is taken away, then we can see move till 11,200 levels in next couple of days. I think till the time supports are not taken away, it's better to be on buy side. Downside 11,990 we like as a good support for index. So till the time these levels are not taken away, it's better to be on buy side. One can hold on the existing long positions with the trailing stop losses placed at around 10,990 levels for the upside target of 11,120 as the immediate target, and above that we will see 11,200 levels in next couple of days.
Well, we'll shift focus to the biggest gainer on the Nifty 50 today, and that is UPL. What a big up move. Up as much as 15% today's day of trade, following its deal announcement coming through. We have Yash Upadhyay, who is tracking this development very closely, and he's here to tell us a little more about what's going on and why such a sharp up move, Yash.
Right. So over the last 1 month, we've been going back and forth with reports that UPL is going to acquire platforms, agrichem business, which is Arista Life Sciences. And today and on Friday, we finally got the confirmation after the company said that it will be acquiring it for for $4.2 billion in an all-cash deal. Now they will be getting $1.2 billion in equity investment from Abu Dhabi Investment Authority and TPG, which will both be investing about $600 million each to acquire a combined 22% stake in their Mauritius arm, which is UPL Corp. The balance, $3 billion, they will be taking a debt with a maturity period of 5 years from MUFG Bank and Rabobank, with the deal expected to be completed by the end of this calendar year or early 2018. Now, there are a lot of positives when it comes to this deal because firstly, it creates the 5th largest agrochemical company with UPL's management guiding for revenue synergies in the range of $400 to $500 million from the first year itself, which is FY21. Also, Arista has a wide product portfolio with specialization in wheat, fruits and other vegetables, which also complements UPL's extensive product portfolio. Also, they have a much wider reach with presence in Eastern Europe, Africa, Middle East and Russia, where UPL lacks, and also UPL stands to benefit from the forward integration as Arista is more focused on formulation of the APIs and molecules, while UPL is strong when it comes to manufacturing. But with every deal of such size, there are a few concerns that the street and the analyst community have. So first is that the management's guidance of the $400 to $500 million of revenue synergies, if they are not able to meet that guidance or whether that doesn't happen in the first year itself, that would be a big negative when it comes to their financials. Also, the huge $3 billion of debt, that would increase their net debt to EBITDA from current 0.7 times to 3.1 times. And also, well, any slowdown in agrochemical demand, we've seen that in the past, since from calendar year 15 to calendar year 2017, Arista's revenues have grown at a mere 4%. So any slowdown there would also have a negative impact. But brokerages, they are quite bullish and have given the deal a big thumbs up. All of them expect the deal to be EPS accretive. So we had CLSA maintain the buy rating with a target price of 940. They believe that the recent the recent correction in the stock price, that offers a great value. MK2 has maintained their buy rating, but have cut the target price to 773 because of that high leverage playing its factor, and Investec 2 maintains the buy rating with the target price of 785 as they believe that once the synergies kick in, it would mean significant upside going forward for UPL.
Well, that said, there are 26 of the 28 analysts on Bloomberg consensus have a buy rating, and it's indicating a return potential of 36%. So the 12-month price target of around 860, it's currently at 632. So that is a substantial upside. So that clearly also explains the kind of up move that we've seen in today's day of trade. Yash, thank you so much for joining us and giving us those details. The other sector that we are keeping an eye on is the consumer durable space and the footwear sector. The reason why we're talking about this sector is because overnight we did have the GST Council meet where it was decided that GST rates for a lot of these goods will be cut from 28% to 18%, which will include something like your refrigerators, your washing machines, your mixer grinders, also TV sets, which have the size of up to 68 centimeters. Don't forget, the other development which came through was the fact that the threshold limit for the 5% GST on footwear was increased from 500 rupees per share to 1,000 rupees per share. We spoke to the management of Bata, and they say about 50% of their revenues come from this particular segment. That is the segment where the cost is no more than 1,000 rupees per pair. And the second one was, of course, Liberty Footwear. They've also suggested about 20% of their revenues come from the segment which caters to 1,000 rupees per pair when it comes to rates going in. So there are a lot of benefits, and this is likely to provide some impetus when it comes to volumes going forward, not immediately but in the long term, which could provide impetus to volumes, and that's the reason why a lot of these stocks were also doing well in today's day of trade. It doesn't mean anything for margins, considering a lot of these companies are going to pass these benefits on to the consumers, well, partially or completely. But on the whole, this certainly has been taken as a positive development for the entire industry, and that's the reason why we've seen gains in a lot of these stocks, including stocks like, as you can see here, Voltas, Whirlpool, Crompton Greaves, Blue Star, all advancing in today's day of trade. So good gains coming in there, and we're going to continue to track gains coming as far as the sector is concerned. But with that, it's a wrap on the markets, but lots more lined up, so stay tuned to the Bloomberg Quint and we'll keep bringing you more.